Hi everyone, this is Eric from Traders Helping Traders with this week's Tricks of the Trade. Is there a way to determine how strong the market is? Is there a way that we can tell by looking at a chart whether the market is in a retracement mode or in a trending mode? Well, I hope you realize that these are both rhetorical questions because yes, there are some very telltale signs that allow us to determine whether a market is in a pullback phase or perhaps looking to change direction, or if it's just pausing in part of a larger trend. Now, before we get into identifying exactly how that works, I want to just take a minute and touch on something that's very important and often overlooked. As support and resistance traders, we naturally gravitate toward support and resistance levels in the market. That's how we trade, after all. Some traders like to use Fibonacci levels, others will use Elliott waves, and there's 1,001 variations. But as support and resistance traders, we are interested in where the market has shown us resistance and where it has shown us support. Why is this important? Because the markets travel between support and resistance. That's what prices do. When you see a market moving, you can be certain that it is traveling to the next resistance level. And intuitively, this should make sense to you. After all, this is a free market and price will go wherever the buyers or sellers direct it. It's what the market will bear. And what the market will bear is usually influenced by what's happened to prices in the past. And you see this yourself in day-to-day life. You might refrain from buying apples this week because you know that the price of apples is abnormally high to what they usually are. Or if apples happen to be cheaper this week, well, you may choose apples over oranges or grapes. It's the exact same thing that happens in the commodities markets, but here we are dealing with a whole host of different commodities, everything from interest vehicles and currencies to the actual physical commodities. But the fact of the matter is that the markets will always move from support to resistance and from resistance to support. And I can show you that quite simply. This is the Euro chart, and you can see that here the market found resistance, fell off to the old support level. Remember, support is our red-green bar combination, paused ever so briefly, and then fell off and found new support at this old level back here. So again, it moves from resistance to support, and look at what happens when the market rebounded. Where did it go? It just didn't stop here. It went right back to this area of old support, which is now resistance. Now remember, we don't treat these lines as precise. It's not carved in stone. We have to give the market a little bit of flexibility because traders are going to be testing the boundaries of these markets to determine where prices are likely to go to next. But remember, always keep in the back of your mind that when price is in motion, it's going to move from one resistance level to another. Okay, so we have a market in motion then. So how can we tell whether the market is truly in motion or whether it is going to change direction or exactly what's going on? Well, the easiest way to determine whether a market is a healthy trending market is usually by analyzing the strength of the pullback moves. And not just the strength of the move, but also the direction of the move. And let me show you what I mean. Here in the euro dollar, obviously the market fell off of resistance up here, made a nice move to the downside, found support right here, and then we entered a little bit of a pullback phase. Now there was a slight hesitation here, and I'll get into that in a minute. But from that, we saw the market give us a pullback that had this kind of shape to it. Now, some of you might recognize this as what's known as a bear flag, but that's not important. Whether it's a bear flag or if this were an ascending market, it would be called a bullish flag. The important thing is that the market during its retracement phase has this type of shape to it, and that it never exceeds the previous resistance. That is paramount, because once the market exceeds the previous resistance, then we have an official change in trend. So what is this little retracement telling us when it has this type of shape? Well, it's telling us that the market is trying to rally, but then it fails in its rally. So what happens after that? We get resistance coming in with our green-red bar combination, and to us that's a good sell signal. You see the market fell off quite nicely here for about 3 or 4 days before finding support again, and then we have one of these. Oops, I drew my lines the wrong way. We have another pullback phase, and once again it has this type of shape to it where it's angling higher. From here the market fell off, and once more we have this pullback phase where the market has this type of shape to it. And from here the market came down, found support a few days after the breakout, and look at what happened after that. Look at the shape of this particular pullback period. It's a lot more sideways, isn't it? So that is your first clue that the market might be entering a retracement or a change in direction of the overall trend. Once the market stops making these pushes higher on the retracement move and actually starts moving in a sideways pattern, then it's time for you to abandon the original trend and perhaps take a look at taking a counter trend trade, which is what we happen to do in this particular market. The other thing I would like to point out to you is that oftentimes we will only see 2 or 3 of these stronger pullback phases before the trend really comes to an end. On rare occasions you'll see 4, and I'm not sure I've ever seen 5 or 6 pullbacks unless you start counting all these little micro pullbacks. But what I'm most interested in is when the market actually paused and traded higher, because what that does is it shows us where the market has found support, and it gets us on the alert for resistance, because once we have resistance, then we're in a position that we can sell this trade again. And naturally the opposite would be true in an ascending market. But you can see in this particular instance, even though the first phase had a very strong push to the downside, we really only got 3 pullback retracements out of this trend, or 3 other opportunities to get into this market. I would be much more aggressive getting in after the first pullback and a lot more cautious after the third or perhaps even fourth pullback, in anticipation of the market hitting a brick wall and perhaps even changing trend. So take a look at that. Keep a lookout for those types of things on your charts and you'll have a better indication as to the overall strength of the market trend and whether we're perhaps looking at a change in the overall market direction. And that's this week's Tricks of the Trade.